before we get into it, everybody, just to give you guys a little bit of background on ourselves. My name is Eddie Vitery. I am one of the founders of Traden, and even though today we're gonna go into the stock indices. The market is gonna open. The U.S. market officially opens in 15 minutes. So we're gonna look at how the market reacts. And although I've been trading for over 7 years and mostly in Forex, I want to show you guys today that by using the fundamentals of how the market works and some of the most basic principles, you're going to be able to trade basically any kind of market. We're going to show you with the market, with the stock indices. We're going to show you with Forex today. Zach, did you want to give a little background on yourself while this is loading up?
Yeah, so I mean, myself, I've been trading now for about a year and a half, and a lot of my knowledge has come through what Eddie has shared with me. And that's one of the things that we pride ourselves at Traden, just using simple and effective techniques. And, as long as you're actually implementing the fundamentals, you need to make sure that you have that trading plan. It doesn't matter if you're trading Forex, stocks, like it really doesn't matter, because at the end of the day, you need to be able to track and gauge your progress. And that's one of the things that I feel is most important. Once you have those fundamental aspects in place, and at the end of the day, like I was saying, you can be and you will be successful, because even in those times where you're, as today's trade played out, you're stepping into that loss through the proper risk management, and through proper analysis, you're still able to turn that into a win, because you can understand, why it lost. You can win in itself just by, as Cam said, only losing $30 rather than the whole 80. So it's just really understanding those core fundamentals. I believe you guys should see Eddie's screen in a second here. So just let us know in the chat if you can see the screen. I don't think you have your charts up just yet, Eddie. Yeah, I see the TF on there.
Let me know if you guys can see it, because I do have my charts up right. And you guys all, just to do a quick check before we go, now that we're all set up, can you guys just quickly give me a yes? And Zach, if you can, just check in the chat, and just let me know if we're good to go. Okay, sweet. All right, so this is how I would like to begin this event with you guys. I'm really happy that we're on this call with you. And I understand that this is an opportunity that you guys may be coming on to learn a specific strategy, or a specific way of taking a trade. And that's a great thing, and we're gonna actually do that. But I want you guys to come into what we're gonna show you, into our portion of this, and I want you to come with an open mind, even more of an open mind than if you were a little bit tired when we just began the event this morning, or whatever it is. But I just want you guys to come with a really open mind. And let me just first ask you guys, I want to see who's focused right now. I want to see who's awake. I know that this is very exciting stuff, you guys. So if you guys are asleep, I've slept 3 hours, I think. And I'm still excited about this, you guys. I'm excited because what I'm going to share with you is information that could possibly change your life. And I'm not saying that to get you hyped up, or to think that you're going to come out of here and be able to make $1 million. I'm going to show you stuff that meaning as to what's happening. I want you guys to understand what's actually going on. When you guys understand that you have everything on the screen right now, and you don't have to overcomplicate things, you don't have to have a bunch of stuff on your charts. I'm going to show you not exactly, I feel, some, if you want to put it in quotes, an advanced strategy, or show you fancy indicators. I want to show you something that actually works, and I want to show you something that will make you money. All right, I'm not saying other indicators and strategies with indicators don't work. I'm just going to show you that with the knowledge and with the stuff that we have on the charts, without anything else, you can make money. And I want you guys to come out of this today more than understanding, say, a strategy. And I feel it's very easy at times for someone with strategy, but there's a lot of stuff that comes with that, because I feel there needs to be follow-up with the strategy. There needs to be, you need to be able to understand that strategy like the person who developed it. And a lot of times, for whatever reasons, that's not the case. I'd rather you guys come out of here today with the knowledge that you yourself are going to be able to spot things. You yourself are going to be able to come up with strategies. And along that lines, like I said, I want to see who's awake right now. And I wanted to just ask you guys this. And I really want to see as many of you, if you can, Zach, just tell me how those chats are coming in, because I just have the screen up. But I want to ask you guys, what do you guys want from today? Okay? And there's three answers, I guess, that I could give you. You guys can give me, okay? I feel that two of these go hand in hand with each other and lead to the next, okay? So basically, you're going to choose, give me your top two choices of what you feel you want today. There's not really a right or wrong answer, okay? I would be a little more inclined to one, but I just want to know what you guys want, okay? Do you guys want me to teach you a strategy in 3 simple steps? Because we can do that. B, do you guys want me to show you how to make money? Or C, do you guys want me to help you understand the market movements? And that's just what I just wanted to ask you guys. I want to see who's awake basically right now. I'm a little bit tired, but wake up, because you can go to sleep after. You can take a trade while we're doing this. You can make a little bit of money and possibly go to sleep before you even have breakfast, all right? So what do you guys want? You guys want me to teach you a strategy? You want to know how to make money? Or you guys want me to help you understand the market? If you guys can, give me your top 2 choices. And again, there's no right or wrong answer. I just want to see where we are all approaching this today. Okay? Zach, if you can give me a little input from what everyone's telling me. I'm seeing a lot of awesome answers. I don't know if it shows me looking at the chat or not. That's why I don't really want to mess it up. I see a lot of it's a lot of good answers, you guys, and I like the combinations, okay? There are a lot of great things. Inclined, a more powerful approach, again, like I said, than teaching you guys just a strategy in 3 steps. I feel I'm going to show you how to understand the market and the movements of this market, and I'm going to show you between different kinds of markets. At the same time, I'm going to show you how to make money by understanding these movements, okay? And we're going to understand stuff, but then we're going to break it down again to show you just how simple it can be, okay? And I feel when we actually understand the market, I'm going to be able to then teach you how to make a strategy, and not even you guys are going to be able to make strategies, okay? You guys are going to understand the market to a point that now you can look at the market, you can discern things that are happening in the market, and you can even come up with your strategies. You can decide, well, look, I understand this. This is happening. There's a criteria that I can put on this, and then now I can make my own strategy, okay? So, again, you guys, I feel today we're going to, more than you guys coming out and only having a 1, 2, 3 strategy, and you know, sometimes it's hard to replicate that, and it looks simple when you see it, but trying to do that is different. I want you guys instead to come out of here feeling like you understand the market a little bit more, okay? Because I'm going to tell you right now, 95% of traders out there are constantly looking for the next strategy, and they're looking for the next system and the next great indicator and the next best signal service that will give them winning signals. And none of that is a bad thing, but it's about understanding the market. And when you use some of the basic fundamental things, and we're going to go through that, you guys are going to see how that's all you really need. Use that, proper risk management, come in as a robot, trade like a robot, and you guys will make profit. I'm going to show you how to do that, okay? We are looking at the mini Russell 2000, okay? This is what's happening right now. And what I'm going to basically do right now is we're gonna get set up. We're gonna look at this trade, okay? And more than me just telling you what I think this trade might do, we're gonna run through a few examples of what it has done. We're gonna do it from the last 3 days, and I'm gonna show you candle by candle what could possibly happen next. Okay, I've been really trading Forex more than anything lately, but today we're going to revisit stocks. We're going to revisit the stock indices and show you some cool stuff, okay? The US market is about to open in about 2 minutes and 50 seconds and 40 seconds, okay? Now, a lot of times, you guys, and I'm just going to be telling you guys certain things, okay, throughout this whole event. So I would pay attention, take little notes if you can, okay? But a lot of times, you guys, when the market opens, and this could be the new trading session, this could be the end of the trading session, the beginning of the day, the end of the day, think of it like this, okay? Stop being so worried about the times that they tell you that the markets are open, okay? Or stop being so worried about a lot of the stuff that you know, okay? I asked you guys from the beginning to come in here with an open mind, okay? So disregard perhaps a lot of the things that you may have learned or may have been taught, at least for this call, okay? And then when we finish, you can put that together in the best way for yourself, okay? A lot of the times at the beginning of the sessions, and there are specific times that you will know something, such as 9:30 in the morning. I'm 1 hour behind. That's why you guys see that it says 8:30 here. But this is the candle, yesterday's candle of market open, okay? Obviously, this is when the big move began, basically, okay? This is when a lot of stuff happened. So we can see that around 9:30, when the US market opened, things happen. But it's not necessarily all those specific times you may see online. You have 4 different sessions opening. It can get a little bit confusing for people to grasp that this market is open and this one is open. In a way, it's designed to confuse you. I mean, everybody is looking at the same information. 95% of traders are losing. We want to be a bit different, so we want to look at a different thing. What I was saying is, with a lot of the market sessions, different market sessions, different times of the day, a lot of times when the new one begins or it's finishing, the market likes to do a little reversal. It likes to fake traders out. That happens on a 5-minute chart. It happens on a 5-day chart, okay? And right now, obviously, this is about to open. I wouldn't be surprised, you guys, to see this. I can see one of 2 scenarios happening right now depending on how strong this market opens, okay? And I don't want to jump too ahead of myself, but okay? This is what I'm going to show you guys after. This is, well, I don't know what all these drawings are, but okay. I'm going to show you guys a little bit about market internals, and that is our bell. I wouldn't be surprised to see this fly back up, you guys, to this moving average, and I'm going to help you guys get all set up right now, okay? But when the market opens, a lot of the time, literally right now, since I told you guys that a few seconds ago, we went from 55, basically the 56 handle, up to the 58 in 10 seconds, 30 seconds. For some traders, that could have been the trade they took for the day. Okay, so right there, we could have taken the trade. It was very fast, you guys. I'm sorry. But that's what I wanted you guys to see as we start the market, okay? This is a bullish market. I'm going to show you how now, okay? But what could happen here, I see, is 2 scenarios. This came up to the line already, to our moving average. The price equalized a little bit, okay? It came into balance a little bit. That's the way I see it right now, okay? Now this can either do one of 2 things. I feel this is either just a test of this, because it could be a fake out, just begin to make traders start buying, really continue back down. We could see it move down to around the 1,250 level, and then perhaps the 1,245 level today. If this candle, which we're going to wait 15 minutes, we're on a 15-minute chart, we're going to see how this reacts, okay? We have to see how this is reacting to this zone at this time, because this is the market open, right? So I already showed you that the reversal right now, the reversal happened from what it's been doing for how long, you guys? For 5 hours, 4 hours. It quickly went back up, took some contracts up there, brought some people in on the trades, make some people take some trades as well. Now we're just going to see, is this a true bullish move, or was this simply a retest, get some people thinking we might go up, and possibly do something? I'm going to draw on the chart a little bit, all right? I was going to draw this before it happened, but it happened as I was talking. This is something I would recommend a lot of you do. You have to have a speculation in the market, okay? You have to, again, like I've always said, if 95% of the traders are doing the so-called ordinary, then we want to be out of the ordinary. This may be something that you guys, you may find yourself on this call for reasons like this, where this was going down, you saw a red candle, and you were bearish. And then as soon as you saw it going up, you were bullish. And you freak out because now it's going up and you're bullish. And that's how a lot of traders trade. They don't trade with a specific, a concrete speculation. Your speculation should only change if something drastic changes. That changes the analysis. And to do that, to have a speculation, you guys, it's a good thing to draw up your speculation. This could do something possibly like this. Here, I'm gonna shift the chart a little bit just so we can get a little more space, right? This could possibly do something like this. It's one scenario. This could just as easily come up and we could be bullish for the day. So right now, this candle is very important, you guys. This is important because this is the one that they use a lot of times to make people take the wrong positions. We saw, and look at how it's literally riding up my projection right there as we're talking, okay? That's how you trade, you guys. You got to trade with your speculation and just looking at some of the most simple things. What do they like to do at the beginning of the sessions? A lot of times they like to do reversals. Since we spoke, you could have made, how many ticks is that? That's about 12 ticks right there. Okay? And you could have just been out. You could have been out of this trade. You could have made your money and then just figure out, okay, let's let this candle finish out and give us a more concrete idea as to what it wants to do. Just getting an idea and putting an edge in your favor. All right? Again, you guys, if you guys are going to come out of this call today, I'd rather you guys come out of this call rather than me be like, hey, take this trade right now. You know, here's a step that I look at, but I feel there's a little bit more to it. I could do that. I could tell you guys, just take a trade, or I could hopefully come out of this with you guys having learned something where now you guys can take the trade. And you guys can open up the chart right now. You can see exactly what I'm seeing and what I'm about to show you. Okay? This is riding up my projection right now. I haven't changed ideas. I still feel one or the other way. If this closes up here, well, now I have more of an edge to the upside. And even more when I show you what I'm looking at over here on the left, on the right, okay? Now that you guys see even how literally, I haven't, like I said, I haven't looked at the stock indices in a while. I have probably over a month and a half. But just by coming on the chart right now with you guys, the most basic things and understanding some of the basic things, you can see right off the bat in the last 30 seconds of the candle, you can make a trade decision and you can be profitable. We were already in profit. The second we took that trade, we were in profit, you guys. I don't know if anybody was quick enough to actually take it, but if you were, congrats. That's a nice, there's people that get 12 pips, 12 ticks, and I'm going to show you guys how we can do that all the time. And just again, I want to see who's focused, you guys. I haven't slept, but that, I don't even know if that shows in the energy. I want you guys to give me the same energy. And I want to ask you guys real quick, what do you guys feel? And this is, I'm talking about in pips or in ticks, you know, a unit of measurement in trading, okay? What do you guys feel is what you would need to make? How many pips, how many ticks do you need to collect in a day to make money off of this industry? If you guys can just, I'm going to look at the chat, all right? $10, okay. I see a few people saying 10 ticks. And you know, people, it's I don't know how to put it, but you guys, there's a lot of people struggling to make, you know, 15 to 20 pips in a day, because the market is in a way designed to take wrong positions, to make you do the wrong thing. 20 to 30 pips, 10 ticks, 12 ticks, 10. I can see that even in this room, a general consensus is between, wow, you know, a little bit lower at 5. And this is something I've always said, you guys. Any limits we have are the ones we put on ourselves, okay? If 10 is, we're going to aim for 20, okay? For the people who said 20, we're going to aim for 25 to 50 pips in a day off of any currency pair, any tick chart. You can make 25 over here, 25 over there. You're done in 45 minutes trading. Okay? I'm going to show you guys right now how we can do that. You guys saw a little bit of the projection. You guys can see how, look at the price action of this move. It went up to the projections of both of them. If this were to close as it is right now, well, I would be a little bit more bearish inclined, okay? And I am getting a little bit more bearish inclined with what I'm seeing. But it's about having your speculation. I'm going to show you guys just how easy you guys are going to be able to make. Have the stock indices. That's not doing great. Go to commodities. You got crude oil. Go to futures. Okay? Understand the fundamentals that I want to show you guys today. And this could possibly, again, change a lot of things for you. All right? So let's just rewind this. We're going to have to not look at this trade. Okay? If you're in this trade and you bought this, again, like I said, when it got up there, maybe that was a good place. This want to do precisely if and when it does something like it's doing right now. We're all the way back down in price. Maybe we'll start going down now. They got the contracts up there they wanted. They made people take the wrong positions. And then now we're going down. You made the money going up. You're out literally in 4 minutes. You made good money. You're out of that trade. You're figuring out what it wants to do next. All fundamentals, okay? Let's rewind it. This is the TF. Same thing. This is exactly what we're looking at right now. I want you guys to do this. Take note. Do this on your charts right now, okay? I want to show you. I haven't looked at this information. I want to show you. We're going to go from Sunday, from that line, okay? I just don't want to see it. I don't want to get any idea as to what's going to happen, okay? I want you guys. I'm not going to add indicators, really. I'm not going to. I want to basically just get an average of the price, and that's it. We have volume down there. Volume is a great thing in trading if you know how to use it, okay? It's an important part of the puzzle. I'm going to show you just how easy we can use the fundamentals and then show you a little bit about market internals, amazing trades. And all we're going to do, you guys, I'm just going to add one exponential moving average. I'm going to add a 50. You can add a 50, a 55. 55 is a Fibonacci number. Some people like that. I've used 50 a lot. I've tested every single average in the world. 50 works. Okay? It's not a big deal. Okay? What is the 50 telling us? Well, it's giving us a little bit of an indication. Are we bullish if we're above it? Are we bearish if we're below it? Okay? An indication, not a confirmation. This is below it. What are some traders doing? They're selling just for the price to go up. Stop them out really hard when the new day begins. Okay? So everything we're doing, you guys, I don't want you guys to just come out of here again and just tell you, here's a trade. I want you to understand what's happening. I'm giving you the thought process, the stuff that a strategy may not be able to tell you if you're only getting a 1, 2, 3 step thing. Here it is, and go try to replicate it. I'm telling you the okay. So all we have on our chart is a very simple moving average. Well, it's actually an exponential, but it's very simple, you guys. All right. So that's all we're looking for right now. This is how you're going to set up your chart. If you guys have Thinkorswim, I would want you guys to do one more thing for me. All right. Go to settings and go to appearance. Okay. This is how I like to have it. You guys can have it whatever color. Have my cursor as white. What I want you guys to do, at least if you guys are going to just look at the charts with what I'm showing you, just turn off the grid, okay? If you click it, this is, you're going to have lines everywhere. Turn off the grid. Why? It's not a big deal, you guys. It's not, you don't, if you don't turn it off, you're not going to, take bad trades. But some people, even the grid, I'm going to turn it on so you guys can see what I'm talking about. The grid in itself can be noise. And people try to use the grid, they try to use it in a way that you don't necessarily have to use it, because it's all about where the money's at, everybody. That's what it's all about. Where is the money at? Okay? The grid can be a little confusing for some people. Some people like to base a methodology on if this moves the width or the size of the boxes, but it's very ambiguous when the boxes themselves move in size, okay? And it depends on if you're zoomed or not. So I don't feel that's very effectively. If you're just trying to base it on how much a candle moves in comparison to a grid that isn't even static, you're not understanding the market, okay? So we're just going to take that out. We don't need that. We don't need anything extra on our chart. So all the stuff you guys have learned about RSI and MACDs and all this stuff, I told you, just come in here with an open mind, okay? This is all we have on our chart, everybody. One moving average, 15-minute chart. You guys can have volume down here if you want. We're not going to get too crazy into volume because I could talk forever, right? So what we have over here now, okay? Look at this, you guys. Look at how the candle closed out. All right? We got the test of this moving average, and it closed on a down bearish candle. Okay? This projection right here is starting to play out. This one began, we made money on it. How the market likes to move, you're going to be able to take even those quick 3-minute trades all the way up there, get out, and then possibly take it going down. Don't get freaked out because the candle's going up. Just because you see it going again, you entering this trade, let's just say we had sold this trade for whatever reason, okay? And let's just say for whatever reason you had your stop loss above all of this. You were willing to risk from here down to here. This is what you were willing to risk for that trade. If this is going against you right now, don't freak out because your speculation hasn't changed. Therefore, For your risk hasn't changed, and you should feel absolutely no way at all if the price is playing within here, because that's part of your speculation. You were willing to risk that from the beginning. So when you start seeing it go up, and you can understand that 95% of traders way about that, and when it goes all the way up here, they might be getting out of their trade with very low profit, breaking even barely with the spread, or they're just panicking. There's no methodology to get out. You're not worried about that. You're like a robot. You didn't care that it went up here. You just let it. You're just letting it run. All right. Your speculation. You have a target. You have two targets. Now, you guys. Again, I don't want to see this data. I just want to. Let's just go before. Okay. I'm going to show you how you want a good way that you could set up your charts. Okay. Going into a session. I can't tell you how to trade if you don't even set up your charts. And by setting up your charts, I just simply mean to the chat. Is everybody following me good? Is everybody good with this? Everybody taking in this information? Can you guys hear me good? I just want to see a few yeses if you guys can. I want to see if you guys are awake. Awesome, you guys. Awesome. All right, cool. If I was gonna go into Sunday, we're gonna act like we don't know really what happened over there, okay? Because I can tell you something that's happening live, and it could play out right now, but that doesn't necessarily mean that it's consistent, okay? We're gonna make sure it's consistent. I'm gonna show you how to make sure. So we're gonna just check from the last couple days. We'll just check the first 2 days of the week, all right? And it doesn't take long, you guys. You don't have to make it a long process. Just, we're going to simply put up some strong levels, all right? I'm going to go get my price level. And again, I'm going to show you guys some pretty cool stuff right now. But I want you guys to understand certain things about the market. And a lot of you may already know this. A lot of you guys may not. But distance, as you know, like this line right here, and this line is at 1268.9, and if we go up to 1268.85, it didn't touch it, and it didn't, you know, it didn't work or whatever. That's not how I would want you guys in a way to look at this, because the market doesn't exactly move in just a specific number. Think of it as a zone, you guys, okay? Think of it as a zone that it needs to be tested. And it might not test it by 1 pip. It might go 2 pips over, whatever. But it's a zone, okay? So instead of even this price level, I'm just going to get out this rectangle. I'm going to put up some major areas that I see that price hasn't been able to kind of pass. Very simple stuff. I'm going to extend everything to the right. We have a level there. I can obviously see some rejection around this level right here. And, you know, we might not even use any of these levels, but I'm just going to quickly get set up. Okay? You guys want to make money? Then get set up. You guys just want to jump in and you're only thinking about only making the money and not thinking about how you're actually going to do it. You know, go right ahead. But I'm difference between being profitable and not in this industry right now. And it could be all a matter of just setting up and understanding some stuff that you may have seen many times, but you may just not have put it into practice, or you may just need to look at it in a different way. And I'm going to show you that now. I just want to quickly, you know, add these areas, okay? Just bear with me 2 minutes. We're just adding areas right now, you guys, where price has obviously had some difficulty passing, and when it does, it usually passes strong. Doesn't stay there too long, all right? We can go, guys. What I'm showing you is just the beginning in a way, okay? And some of the stuff you're understanding right now, it's dealing with supply and demand in the market, showing you some of these levels, okay? That's what runs the markets. Supply and demand, people's reactions to actions, and perceptions. That's basically it, you guys. If you guys learn to understand some of these things, it's beautiful. All right, we see obviously this level over here. I want to kind of just go through this a little faster. This level held up a few times. I can see a level up here clearly. Oh my. All right, we have some kind of zone around here. It does cross over, you guys, but it comes back and it tests it and it has a hard time. And then we're just going to draw one more. Okay, crazy into every little one we have, and you don't really need to draw resistance and support lines like traders do a lot of times, and you're drawing them basically everywhere. You don't need that. You need the strongest ones, okay, you guys? This is a basic way we could get set up. At least we have some kind of idea of some strong levels we could look at in the market, okay, going into Sunday. Another little small level there we could possibly have, and let's just say something there. All right, let's just say we're ready right now to attack this market. Let's open up market Forex soon enough. But what I'm going to run through right now with you guys, this is extremely valuable, I feel. And this is valuable because you're going to understand how we're reading the candlesticks. And we're using the information that we get every single time to keep making an informed decision. Market internals are basically, think of them as the mechanics behind the stock market, okay, the stock exchanges. Think of that, the market internals as that, as a gauge into what is really happening behind the scenes in the stock indices, okay? More than anything, the New York, NASDAQ, obviously inside of those are included, you know, the S&P, the Russell, there's a few, okay? Think of the market internals as a gauge to understanding what's really happening, not what the price is telling us, because obviously price fakes you out. Price takes you and makes you think things that doesn't necessarily happen. And they do it for a reason, to make you lose money. So looking at the market internals, we're not going to do such a crazy in-depth look at it. I'm just going to show you how using basic candlestick reading with market internals will make you money. And then even after that, I'm going to take out market internals. I'm going to show you one of the same examples. We're going to show you one example with it and one without it. We're going to just see what we can take out of them with and without. But right now, the U vol minus the D vol is basically the breadth of the market. This is the ratio between the up volume entering the stock exchanges and the down volume that's entering the stock exchanges. I have this little nifty indicator up here, which basically a lot of the way people want to use this information is putting them as a ratio, the up versus the down. And so we get these numbers over here, okay? What this is telling me right now is that in the New York Stock Exchange, there is about 1.25 buyers to each seller. In the S&P, which we're looking at, well, the TF is a little different, but the S&P, there's about 1.28 buyers to each seller, 1.77 to each seller in the NASDAQ, okay? If it's red and, you know, when it's 10 sellers to each buyer, you know you have a strong market, a strong bearish market. When you're between -2 and +2, it's virtually kind of a neutral market, okay? Again, I'm not going to run so crazy into it. I just want to show you how it works. The advanced minus decline. This is showing us in this particular moment in time, how many stocks are advancing in the market versus declining in the market. Okay? Although you guys may not trade stocks, again, just bear with me right now, because what I'm going to show you is how to read candlesticks, which goes back to Forex, and then we're going to go into Forex, and it goes back into other areas in other markets, but sometimes people just don't take the time to really understand what's going on behind each candlestick and understanding why. You guys are going to get out of it, and you're going to be able to use this for any market, okay? The tick chart, I feel, is one of the most powerful market internals. There are other market internals. There are actually market internals specifically for every, like for the S&P and for the Russell. But this right here, the U-vol minus the D-vol, the advance minus the decline, and the tick is showing us the information of the entire basket of the New York stock. The tick chart is showing us how many, in this particular second, how many stocks of that basket are upticking versus downticking for this particular second. So if IBM went from 150 a share to 151, it went up one tick, and Google went from 1,000 to 999, and it went down one tick, we would be at the zero line. It would be a neutral market, a neutral candle, okay? That's basically, this is very reactive and very fast and very effective. And what we're looking for, you guys, and we're going to get right into this after, is understanding the number 3. The number 3 is extremely powerful in this market, in these markets. 3 is a psychological number, which is why it works so well for them. For them, I mean the big guys taking a lot of these people's money. Number 3 is a great number. I'm going to show you without any of this in a second. But what we're going to do is we're going to look for a trifecta between our market internals. Think of the market internals like a car, you guys. This is, you know, a great analogy. The car, it's showing you what's below the hood, all right? And everything you want to do, if you want to bring it back to the idea of a car, think of conscious. When you're switching gears, you're not double thinking. You know, you're not asking yourself all these questions. You're doing it. You know you have to do it. You're a robot. You do it. That's how trading is going to be. And right now, we're going to quickly look into the stock indices, all right? So, this is Friday. We can see that obviously there was a little bit of a whipsaw in the market coming into the end of the market close on Friday. Okay? And I'm going to go up to, we're going to look at the market right before the U.S. market opens. Okay, so around, we're going to go to 9:15 in the morning, which is 8:15 on my chart. All right. We're going to zoom in a little bit, and let's go to, oh man, okay, well, that was not supposed to. All right, so this is the market at, this is at right before the market opens, okay? We don't have this information that comes out, obviously, before 9:30. The market internals only show from 9:30 market open until the market close, the stock exchange market close. All right? So we didn't have any information right now, let's just say. And I'm going to run through what kind of trades we could take here. All right? Two options coming into the open of the market. You can either, you know, take a trade right away, or you can just wait. One of the biggest things about trading, you guys, is patience. You don't have to take every single little trade. You just have to take the highest quality ones. All right? This is coming into the market. We can see that there was obviously a big selling the day before, and we've been getting some retracements and consolidations in the market. What can we use? What's a very simple tool that we could use to confirm any kind of bias as to where the market could go, extending past to or retracing to? I'm sure a lot of you are probably thinking about it, and that's the Fibonacci tool. Again, you guys, I'm just going to show you some of the basic stuff and how it works to make money. We could put up a Fibonacci tool, and what do you know? Our line over here, which was a resistance we had earlier, and the 50% Fibonacci are aligning in price right before market opens, a little bit before market opens. It's aligning in price. We're getting a confluence between a support resistance line, however you want to call it, a Fibonacci. We're getting a confluence before the market that the price can't go above that. The market starts going down, and we start seeing some down movement. Now, what could happen? And I'm hoping you guys really rebound. This could be a fake out beginning the session and then go back up. We could possibly target 1272. Or this could fly down, possibly go down to our next whole little zone we got here. Most definitely, probably at least until the 23.6 level again. I would say we'll probably go down to this level, maybe retrace back up, and possibly go down to 1260. That's another scenario. We have to put different scenarios because the market has different scenarios that can happen, you guys. And you guys have to be able to react and adapt. So this is coming into the market. Now, this is the first candle that happens. If you guys had taken the sell right there, you guys would have reached your target in 15 minutes, maybe even in 5 minutes. It went all the way down, okay? But how do you know what's going to happen now? This market just flew all the way down to an area that if you got into that trade, good, but maybe you didn't because you wanted to see what would happen. Now it's all the way down to here, okay? You have to decide whether it looks like a good opportunity to take this trade or not. Do you think it's going to retrace, fly up, or keep going back down? That's where the market internals come in. All right. So we're going to go only to the data of that day. I don't want to get ahead of myself, you guys. Because again, none of the stuff has happened. You know, none of the information later has happened. So we have to see what exactly happened then and understand the price action of how it off the bat. When this opens, and I'm looking at my market internals over here. Notice the zero lines I have. This is the zero line, the zero line, the zero line. Okay, we're not going to overcomplicate it, you guys. This is below the zero line at this point, okay? They're showing that the market, when this candle opened, the market was slightly, there was not enough force to bring it past and make a real bullish move, which we can see here with this wick, and then it brought it down. This is very bearish. There's barely any bullish activity here. A lot of the volume is downwards in this market. As soon as the advance and decline opened, we got the little retracement up, barely above zero, and a strong move down. The candle was closing basically at its low. These are things you have to notice, you guys. Where is the candle closing in relation to its body? Where is the high? How big is the candle? And where is it in relation to the context of the market? Our tick chart opens and it never barely goes into a positive territory. And a lot of people will tell you with the tick chart, you're looking for the readings above 1,000 lines, which are basically like a reversal point. Someone will tell you the tick chart is only played like that. I don't feel that's entirely true, and it comes down to reading candlesticks, you guys. The body of the candlestick and the close, everything tells us a lot. Everything in this market right here, although this was a big move, you could possibly look to sell this. Okay? You could look to sell this, and look down here. We have a confluence of a couple things down here. We have this area of support, this zone of support that we marked from before, and it literally came down before it touched it, and now it's touching it again. It's rejecting the price at this point. At the same time, we have our 100, basically the 0% of the Fibonacci. We have a confluence here of indications that perhaps to get the best idea if we need to actually take this trade to keep going down or not would be, how is price reacting at this level? We see it go down, it fly down to our target if you had taken that sell, but it rejects and it can't close into it. Everything in the internals is telling me there is a lot of bearish activity. You got this big candle, but it could possibly keep going. I'm going to wait and see. Is this area going to be breached and closed beyond, or is it going to come back down in the next candle and reject again? That's what I'm going to look at. Market internals tell me that if it does close below 1260, I should probably sell this market. The next candle opens, we're going to open up the next candles of the market internals. What happens, you guys? Price breaches through strongly and closes beyond the zone. Not the entire zone we had here, but it closed beyond this whole zone right here, beyond the Fibonacci, and market internals was telling us before that there's strength. The candlestick readings are telling us there's strength. What is it telling us now? Simple candlestick reading, you guys. What is this candlestick doing from here? Lower lows and lower highs. And the closes are closing lower, below the zero line. The next candle on our advanced declining, lower lows and lower highs, closing almost all the way at the close, at the bottom. Our tick chart, barely going into a positive territory. Everything is basically negative for 15 minutes, barely ever going up, and closing lower than the last candlestick. Everything to me right there is telling me sell that. Where somebody might be a little bit doubtful because they think this is just going to bounce off, even if price is not going all the way down and closing down here, it is closing beyond our zone and market internals basic candlestick reading. It looks like there's still force in this market. Why don't you sell it? If you didn't take the trade up there, maybe take the trade now. What happens the next candle, you guys? We keep going down. Okay? How much is this from here, you guys? I'm just going to say from this level. Even lower than what we would have ideally wanted to get in, which would have been around here. 64 down. How many ticks is that? That's a lot of ticks. That's almost 10 handles on the stock indices in 30 minutes, in 45 minutes. You guys could have made money. All right, we're going to come back and look at our live example soon. But right there, the drop, it happens right away. You make from 60 down to 55, basically, 5 handles in one candle. Market internals tell us at that point, at the end of that candlestick, should we stay in the trade or should we not? Lower lows, lower highs, closing at the low, below the zero line on our U-vol, D-vol. More volume still going to the downside. Advanced declining. Couldn't even make a wick to the top side. Straight bearish activity. Stock closing almost at the bottom. But what did we want, you guys? We want the trifecta. And what's the tick chart showing me right now? Although these are going lower and lower and lower, this made higher lows, lower highs, higher close, and it's going back up into basically the bullish territory. It looks like it's retracing. The price is going down, and the price closes down as this closes up. What is that telling me, you guys? For me, that would personally mean, well, the price is continuing in our favor, but one of them is giving me not a confirmation, an indication that the market could slow down. So I'm finding out, well, look, this is telling me we could possibly start seeing a reversal happening soon. If I see a bullish candle happen, I might get out of this trade. If this keeps going down, I'm still in that trade. I could be moving I can be taking Nadex trades. My Nadex trade that I took all the way up here that I sold, I felt confident to sell it up here. If you did, maybe you didn't take that trade. Maybe you took it right here. You still feel good about that trade. Maybe you took a contract at this point. Maybe you took it at this point, contracts up here. Everything is still valid. There hasn't been really an get out yet. I'm still in this trade. We're letting it run. If I see a bullish candle, I may get out, but I'm going to look at market internals. What does the next candlestick do? Keeps going down, you guys. We're still making money. Okay? Lower highs, lower lows. Closing at the low. Over here, we did get a big retracement up on the tick chart. But what else are we noticing, you guys? Candlestick reading. We're not closing lower than even the open of the last candlestick. We're not making new lows. To me, this in combination with a doji forming on my advanced declining, where we're not making, it doesn't appear, well, yeah, we did make a new low, but we didn't close lower as we did in the last three candles. We're not closing all the way down here. And we're not making a significant drop. More things are telling me, be careful, because a reversal could be in play. Moving down my stop loss, still have my Nadex contracts in play right now. But I'm making money the whole way down. We've made basically 10 handles right now. Ticks. That's 40 ticks, right? That's 4 ticks per handle. Handle is a point, you guys, from 66 to 65. All right? That's 40 ticks right there. In 4 candles. Simple stuff. What happens there? The next candlestick. What do we get in price, you guys? Not even looking at the market internals. We get price right here, giving me a candlestick after I can see exhaustion in the market, and the internals giving me a heads up since 2 candles ago. I'm getting out of the trade. I just made 40 ticks. I'm getting out of that trade. Okay? What does market internals tell us on that candlestick? We get lower highs, lower lows, and a close at around the middle of this candlestick. This is the green one right here. On the advanced declining, I want you guys, we're going to see. I'm going to say this is a good time to get out of the market, okay? But I want somebody, anybody, to just help me understand what is this showing me right here? What is this candlestick? Only from candlestick reading, which we use everywhere, which a lot of people appreciate. What is this showing me? A lot of people will very easily just notice this. I see red. I see yellow. We're going down. This is what's happening right here in this candlestick. It's yellow. We're still going down. What is this actually telling me? It's telling me that we haven't low now, and we're not able to extend beyond this whole zone over here after the market internals already gave me a hint. And the tick chart closing higher, and it looks like it's just bouncing against this level. Everything was telling me, I think it's best to just collect your money and get out of this trade. If the market is truly bearish, we may get an opportunity if it bounces back up to this zone, back up to this zone over here. If we get an indication, we're going to keep taking that down. I'm just going to now run through what happens, okay, you guys? So we can get into Forex a little bit very soon. What happens next? I'm just going to show you the result. I don't know. This is where I would have perhaps taken the trade. If I didn't, perhaps taken about 20 ticks. The minimum, 20 ticks. Possibly get out of the trade right there. Market internals are telling me it might be a good time. What happens next? Let's just look at the next 5 candles. Move right back up into our zone. You would have been wanting to have gotten out of that trade down here, because now you don't know if this is going to go rebound or fly up. Next candle flies up to the zone. And right here, I want to look at the market internals. I want to see what it's telling me at this point. This is this candle. Price is going up. We already made this whole move. Let's just say, to put it even, we made 30 ticks right there. Okay, to not put it at 40 and to not put it at 20. We made 30 ticks. Price is going up. Higher highs, higher lows. Higher lows, higher highs. What's happening on our tick chart? Our tick chart is showing us that yes, it went higher, down into negative territory. After it retraced back up into positive territory, we're seeing it go back down, and price is following it. Right here, you could have possibly taken another sell. Possibly. I'm not telling you to do that. You already made the money you need to make in 1 hour. You don't even need to trade at this point. But if you did, that could be another entry. Maybe we can make another from 62 back down to 54. We can make another 20 pips, 20 ticks. Let's just say you sold. Price does start stalling out. And then we're just going to look at what happens for the rest of the day, you guys. I want to run through some next stuff, and I want to just show you how we don't even need any of this to begin with, but just how powerful this is. I just showed you a trade that, what does it do? Price goes down, stalls out, doesn't give you some very nice readings, but by the end of the trading day, as the trading day ends and the very last aftermarket candle, back down to 54. You made money either around here, zone. We let it ride up. We didn't really need to take this buy because we don't know if it's just going to bounce and come back down. Market internals tell us that this is exhausting up here. We could take that trade. You have your target down here. You have your Nadex contracts that you're buying at this level, any of these levels up here. Everything expires in the money. And it finished off. You made possibly up to 60 ticks on just one asset, you guys. On just one asset. I hope you guys are excited to have seen that. That's some pretty powerful stuff, you guys. If this is exciting, please let me know. I want to see who's still awake right now. And going back to what I told you guys before, let's just disregard this, okay? We're going to get into Forex really soon. I did want to show you a little bit more of stock stuff, but at this same example real quick. Same place we went to right before we took the trade. Now, I want to see who's awake, and I want to see who's been paying attention, because What I just showed you guys and what I'm about to show you right now too, literally that can change everything for the way you trade. You don't have to put up every indicator or have all of us have to understand the markets. And now I want somebody, anybody, to again answer the next question. It's not a right or wrong answer. If you see it, that's a great thing because it means you're paying attention, you're understanding what we're going over, and you're understanding that some of the most fundamental and basic things are the most powerful. Okay? I want, and I would like to see as many answers as I can. What is going on here? Without market internals, with just the stuff that we talked about today, and I'm not going to repeat exactly what I said, but what happened here? What happened in this zone? Okay, I'm gonna highlight this whole zone for you guys. Okay, what happened here? I'm gonna give you guys 30 seconds. What happened in this zone, you guys? Anybody? Okay, perfect. I see some people, retracements, consolidations, inside barriers. There's no right or wrong answer, you guys. It's only interpretation. I've always said this, trading is an art. Nothing more. You don't have to be a rocket scientist. What I see may not necessarily be what you see, so I can never tell you you're wrong. I can only give you my opinion. A lot of great flatlined, consolidation, oscillation. What did we talk about? And all of these things are true. What did we talk about just recently? What did I say? Some of the most basic things are the most strongest things. Number 3. What does this do, you guys? 50% retracement right here, setting up our charts. What happens? 1, rejection at the level, comes down. 2, rejections at the level, comes down. Basically a third. You could even call it a fourth, which gives you even more indication. But all this stays in this zone, boom, comes down. 3 times, you guys. That's what I first see. As soon as I see that, I see 3 times. This is before market internals are available. This is strictly in a time where a lot of people don't even like to trade this currency, this asset, because there's not a lot of volume. But what are the very fundamentals here? 1, 2, 3. 3 times rejection of a price, rejection of a Fibonacci level, and a support level. Followed by the rejection with a... What's the basic stuff, you guys? Everybody tells you, learn candlestick patterns, learn trend lines, learn this and that, proper risk management. The only problem is everybody's looking for candlestick patterns everywhere. And you can, if you go on a 5-minute chart, you go on a 1 hour, everything, you will see candlestick patterns virtually everywhere. It's about knowing which ones you need to actually pay attention to. I'm paying attention to this bouncing 3 times, rejecting the 3rd time with a strong bearish engulfing pattern. What's the volume on this candlestick here? If we look down here on our chart, there's not a lot. We have about 148 volume on this one. Bearish candlestick pattern, rejection of the 50% and the support level on the 3rd time with higher volume. I could have taken this trade here. Stop loss. Nadex contracts up here, selling before market even began. Before, do you know the out of the money premium that you will make on a trade like this? These are the kind of contracts on Nadex that you put up $5 to $9 max and you come out with $80 to $95 risk in contract. How? I showed you with market internals. I showed you how to read the charts. Basic candlestick reading for powerful results. We don't even need all the market internals. We look at the fundamentals, what happens. I hope you guys really took that in. Now, I'm going to get a little glass of water. And Zach, I know Zach wanted. Let's just look at our live trade. What is it doing, you guys? Obviously, the bullish one, our bullish prediction started. We made money on it to begin with. But I don't like how this candle thing looks. All right, but what did it do? From the line we drew, went up to the line, rejected, and candlestick, you guys. If we could have been seeing it live, you would have seen perfectly. It opened and it actually rid my prediction down. I hope you guys see how as soon as we took the trade, the market did what I speculated off of very simple stuff. It rid the prediction up. We made money, told you to close out there, see what it does after. Rejects off the price, and it literally rides my prediction down. I don't get scared. And this is what's happening right now, you guys. If anybody had taken that trade, there's some money there. The trade is not over. We look at market internals. What could be the prediction for the day, you guys? What's happening right now? Let's just quickly look at this, and I'll let Zach take over for a little bit. Started off bullish, immediate rejection on our price. That was this whole move that we made money going up to, and we got out at the top. Lower highs. Closing lower, back into the zero territory. Lower lows, closing at the middle, right at the line. All of this, you see the wicks down here. Where is the body primarily at? In the positive territory. What I think might happen, you guys, and if you guys were selling this, I would feel that the candlesticks right now are going to be very important. Because right now, we're bouncing against this line. A lot of the times, we will see a rejection there, and price will start to go back up. We're seeing that, although we did start with some negative activity, the tick is telling us, either way, our candlestick body fairly in positive territory. Perhaps all of this was the fake out for the day. And so what I would personally look for is, I want to know again, just how we saw the price react here, where we could take a trade, we can make some money. If you were selling it, possibly get out of your position and or see how this reacts. Because if this reacts, and then we could then have to adapt our speculation, if this becomes truly bullish, to possibly go back up and do the original move, the other scenario we have been talking about. This could have just been the fake out. What does the candlestick do in the very opening? Goes down and immediately starts going up. Fakes out, makes people here start selling. We're closing at the middle of this candlestick, rejection along the zero line, and everything is bullish here. I would feel a little bit more bullishly inclined. I want to see, how is price going to react against this zone? That's what we want to see, you guys. Now, you don't have to wait on my saying of what's going to happen. You guys can go on the chart. You guys can check this out. And you guys can also now start having your own speculation ideas. Zach, you want to take over for a little bit? I'm just going to get a glass of water. And I know you had some awesome things to talk about too. You guys, please let us know. Just write in the chat. I'm going to show you more stuff.
Hey again, everybody. That was definitely some powerful information. And, when it comes to trading in the markets, you just like in life, you need to actually be reacting. It's a real-time environment. There's a lot of volatility regardless of what you're trading. and you just need to be able to have that situational awareness. Now, one of the reasons why we love working with TradingPub so much is because our vision here has always been to create traders. And how do you do that? The education that they need. We don't necessarily want to see a bunch of people who are signal followers, because when you become reliant on somebody else to send you that signal, on a day-to-day basis, you're not actually learning how to gain that time and financial freedom that you deserve. A lot of the time it really just comes to bringing it back to the fundamentals so that you can make those effective decisions regardless of what indicators you choose to use on your charts, or which ones you choose to completely get rid of, because you can still trade on really any asset. Now we are going to be moving here for the last 30 minutes or so to the foreign exchange, and it is different than when you're looking at stock indices, because the foreign exchange does an average of over $5 trillion of volume traded daily. So naturally there is going to be a higher level of liquidity. There are going to be many trading opportunities across the whole day. And for those of you who are unaware, I'll just quickly bring you up to speed. The Forex market, it is open 24 hours a day. It's open Sunday when the market opens at 5, all the way until Friday at 5 when the market closes. So with the Forex market, there are a lot of major currencies that you can consider. There are four main ones that we're going to look at: the British pound, the euro, the Japanese yen, and the US dollar. And if you just want to go a little bit farther, there are about 7 major pairs that account for 85% of the total volume traded. So when you are trading on a currency pair, you're essentially buying and selling simultaneously. So just to give you a quick example, again, if you're unfamiliar, if you have a buy order on the euro versus the US dollar, essentially you're saying that the base currency, which is the euro, is going to gain value over the quote currency, which in this case would be the US dollar. So just leading back to Eddie's example there, you don't need a bunch of crazy lines and indicators that you don't even fully understand to make effective trades. You just need to know that basic fundamental information, and then you can apply it really to any strategy that you want. And you don't need to search, and have 50 different strategies. You really just need one that's effective and that works. And when you start doubting yourself, you start doubting your decisions just because of whatever noise is going on inside the market, you need to remember that this is created to mix up your natural human emotion. And it's leading back to that same idea of you need to be reacting, because if you're not reacting in the right way, and you have that emotion emerging inside of you, this is the time where you can and will lose money. So ultimately you need to look at it and approach it where you are detached from the final outcome, because you can expect your analysis to actually play out. You feel confident, and at the end of the day, as long as you're managing your risk accordingly, even back to Cam's trade this morning, you make those necessary adjustments and you avoid blowing your entire account because of one poor decision. And that's really what it comes down to. So I know that you guys are excited to get into these Forex currency pairs. We are going to show you guys that right now. And these same fundamentals of everything that we've been showing you, it can be applied to anything. So keep that in mind. Hopefully you guys got some great notes down. We will share this with you now, and then we're about to close off the webinar here. We do have something that we're going to share with you guys. We're only going to take a minute though, just because we wanted to spend the majority of our time focusing on giving you as much value as possible. So Eddie, I'm going to pass it back over to you now. I'm just going to mute myself again, just because I don't want any feedback coming through.
All right, perfect, perfect. Can you guys can hear me again? You can hear me good? Just a quick yes. And while you're answering yes, I just want to ask you guys now one more time. How much do you guys now see from literally one example, basically that we looked at? How much you guys think now you guys can is a good select in the day? We had a lot. We had some fives last time, 10 to 20s, 30 was the max. Do you guys now start understanding just how easy it can be? Again, you don't have to overcomplicate these things, and trading is an art. So what I believe, you guys, and what I speculate can be 100% different from what you see, because everyone paints differently. But if we start, training our eye, you guys are going to be able to see that 25 pips, ticks, whatever, on one asset a day is more than possible. Okay? Just from the information you're getting today. You're getting Cam's strategy. You're getting stuff with market internals. And this information that works on any market, really. With the stuff you guys are coming out with today, the value, you don't need to be like many traders out there and continuously look for the next strategy or the next anything. And this is how our session was led into with the 3 points that I asked you guys earlier. You guys now are starting to understand the market more, how to read it, how to actually understand what it means. Through that, you saw we made money even in the quick fake out reversals. We made money, and immediately. Now, we made two things that go together, and with you understanding the markets now, you guys can go on a chart, and in 3 simple steps, you can come up with your own strategy based on understanding the market. The 3 steps, what are they? You're going to analyze and you're going to interpret the market. You have to analyze and interpret it, or else how are you going to put that together? Number 2, you're going to designate parameters and rules based on your understanding of the market. This happens so and so many times a day, or when this happens, this is the reaction. I'm going to put parameters around that. Number 3, I'm going to test, and I'm going to test. And only after I've tested 3 times, I'm going to test one more time, and I'm going to verify that information. Basically, I'm giving you guys a strategy of the entire market. Because as you understand the market, you understand how it moves. And you understand how it moves at certain times. And for how long. There was a reason we took that first trade at the very beginning as the market bell dang. We took that all the way up to the moving average, past the breaking point, and we got out. There was a reason we did that, and we didn't leave it because we would have been losing that trade after. But there was a reason when you start understanding the market, even with me not looking at the stock indices for the last month and a half, 2 months, you're looking at the markets either way, Forex, commodities, whatever, and you're understanding how to use that information. And we don't need all these things on our charts. What did we put on our charts? We took out things. We took out the grid. We took out the indicators. We put up one simple moving average, exponential moving average, and that's it. All right? That's all you guys need. I hope you guys see that 25 pips in a day is nothing, especially in the Forex market where we can move 25 pips in a candlestick. Okay? And we did in the stock indice too. And that's what, just going back to what Zach said, you guys, it's all about creating traders. That's what we're trying to do. We don't want people to, you have the power to make this work. Okay? Everybody has the power to make this work. And as you guys saw, maybe when Zach was talking, I was setting up my chart quickly, 3 minutes, set up the chart, and we can get our levels over here. Before the event started, I didn't want to get right into Forex, but this is what was happening right before. You know, I'm an hour behind, so this is the market open when we were taking the ES trade. I didn't tell you guys, but I had been looking at this level since yesterday. And what I was looking for is how is price going to react at this level? Obviously, leading up to market open, we had a rejection of the price 1, 2, 3, 4, 5 times right here. Another rejection of the price by closing below it. When you started seeing this movement go down, or even in the candle before, that could have been an entry to short this currency pair. I didn't want to tell you guys this earlier because I didn't want to. I needed to show you guys how to read the candlesticks first, or at least give you my interpretation of how to read. All right. Now, this was a zone that we had to look at. How did price react? It's going back up. I wouldn't feel very surprised to see this go back up. And seeing the bearish move that we had earlier in the week, a very possible scenario, and this could be a trade that you guys could look to take, ideally would have been seeing how the reaction was here, first here, then here. Now from here, if we see a close above our biggest next zone, which is this zone right here, we're going to have to see a big move because it's going to have to go through all of this money here and whatever zone. If we do get that, and even better if we get it a little bit higher because we do see that there's a peak here, but if we get a close above this zone, I would have more of a bullish inclination as to what it could possibly do for the rest of the day. It's only 10:40 in the morning, you guys. There's still a lot of action that this could do. And from what I'm seeing, this could be a setup, you guys, we could take on the USD JPY. If you guys are looking to take this trade, I would say demo or take very, manage your risk, as always. That's all I can say. I can't tell you what to do with your money. But like Zach said, when you have a methodology such as anything, if it wins 90% of the time, 80% of the time, whatever it is, we don't have to win 100% of the time to make money. We just have to win enough. And we have to put the probabilities in our favor, the edge in our favor. That's all we're trying to do. If you're approaching the market only thinking about winning, you're approaching it like 95% of the traders, and you're approaching it with an ordinary mentality. We want to approach it with an out of the ordinary mentality. We're going to see how this projection rides. This is simply from putting up strong level, strong level, strong level, strong level. How is price reaction? True price action, rejection at certain levels, showing me rejection before the move down, possibly hinting at something before, giving you an idea to take a trade. Could have made that trade down to the area we had put. It goes down to that area, could have gotten out. Could have been scalping this. Could have been taking premium on Nadex contracts. Could have been selling a Nadex contract all the way up here. As you see, this have a rejection. As this closes without being able to do this, without being able to close beyond this. So we're going to see how this plays. Now, I know you guys are probably interested in knowing. Everything I've told you guys is it's just the frosting, you guys, of the cake. This can go so much deeper. We can go very deep into the matrix. There's a lot of things about trading that you can get into. I'm showing you right now that with little to no knowledge, if you a game on your cell phone and you can play Pong, you can trade. And I'm showing you how to do that by putting up the most fundamental stuff, the simplest stuff. I'm pretty sure you can notice that there was a rejection of price here without me having to tell you that. Pretty sure you can notice that it couldn't go beyond this point. Does it need to get more complicated than that? No. Can it get deeper than that? Yes. I'm just showing you guys some of the basics right now. But with the basics, you could have been beating 95% of traders out there. All right? I know you guys we don't have market internals for the Forex exchange because the Forex exchange is not centralized. And there are other things, a lot of other things, like I'm telling you right now. But I'm just going to show you quickly. We have 15 minutes. I'm going to show you another very basic and very simple thing we can do. I'm just going to throw up an RSI on this chart. Okay? I'm not going to throw up a lot of indicators. I don't need confirmation from 4. We're going to just go back to some of the simple stuff. I'm going to put a 14 exponential on my chart. Done. All right. Let's just look at what price has been. We can go from anywhere. We can do this from anywhere. All right. Divergence is something a lot of people have heard of, yet a lot of people don't practice it, or they're so involved that I need to get this indicator that cost me $500 and apparently is never losing a trade. Use the basics. And I can understand what's happening in the market. Okay? I want you guys to notice what price does with divergence and how we can use divergence, something as simple as divergence, to take good trades. Okay? Divergence is basically, let's just zoom in a little bit. Divergence is basically, you guys, we see the price go up here and we see the RSI also going up. If this candle had kept going up and the RSI also went higher, there's no divergence. It's following, the RSI is following the price. But if we have over here a higher price and yet the RSI is going down, it's lower, there's a divergence in the reading of this indicator. And what that's telling me is not a confirmation that the price will go down, but an indication. Everything is only an indication. Confirmation happens after it happens. So you have to, reacting to price is again what a lot of traders do. And you have to be able to react to price. You have to be able to adapt to market reactions. But the power comes in more than being a reactive sort of trader, being a trader that anticipates the moves. Like I showed you guys on the ES live. That's what you want to do. You want to anticipate the move and have a set idea and reason of why you're doing that. Okay? So, we want to anticipate. And this is a good way of anticipating the market. I want to show you guys something. Price goes higher over here. The RSI goes with it. Okay? Then we basically, we get a whole kind of reset. You know, it goes back down a few times. It's in this whole consolidation zone. Let's disregard this. But either way, let's just put up a line on our RSI. Okay? Just for you guys to notice something a bit later. We're going to take a look at it from here when it actually started going up without really coming back down. Price goes up, RSI goes up. Price starts going up higher from this point. RSI starts going up higher as well. We are getting a confirmation that there's still basically momentum there. It looks like that's a real strength behind that trade. What happens here though? Okay, we were going up, it looked fine. You could have still been buying here, or it could have been confident that your long position was still fine. What happens after though? We make a new high. As we make the new high, We're not making new highs on the RSI. Matter of fact, it almost looks like we're sloping down. So while we're going higher in price, even though this isn't the most nice example, while we're going higher in price, we're not going higher in RSI. This works on a stochastic, on a MACD, on basically all the indicators everybody uses. Just that a lot of people don't use it, perhaps to the best of its ability that the indicator can show you. What's also happening here? The price, when it was all the way down here, it's obviously increased this whole time. What has the RSI done since all the way from the price down here moving all the way up there? The RSI, on the other hand, is declining. We're inclining over here in price. We are declining over here, showing a divergence in the RSI. What does this show me? It gives me an indication that there can possibly be a market reversal. What happens here? Bearish engulfing candle as we get that divergence between these first peaks. Bearish engulfing, price flies from the top of 180 to, let's just say, 880. That's 300 pipettes right there, 30 pips. As soon as this candle closed, you notice the divergence here to here, even more the divergence from here all the way up to here. Bearish engulfing candle at the right time. When this candle went back up and retraced, you could have gotten this at the highest point of this trade. And basically, immediately, no drawdown on your trade, no loss. Your Nadex contracts destroyed in the money. It reverses. Notice how the price goes back up almost to this whole zone. Yet, where is the RSI? Going down. Keeps going down. So we could go down. In the price, you're going to be able to see these divergences on different time frames. They're going to have different, obviously, be valid for different times. You're going to notice, though, when you do get the divergence, go down to the next zone. Where's the money at? Maybe we don't even use a moving average, which obviously held in this case. But where is the price having kind of a problem getting through? If we just quickly drew up our things, if we had set up for this day, well, we obviously know that there's some places down here, literally goes down to the money, goes back up. Immediate profit on this trade. Now, our live trade, if anybody was taking it, we got a little bearish going down. What are you, if you have a speculation, you're not freaking out about this. It's going down. It went down all the way over here. There's people who got out of this trade who possibly got out with a loss here, when this could in fact close very differently than how it looks while it's forming. All right, you guys. Obviously, this is going to take, we have the rest of the day for this to play out. Could have had a stop loss around down here, down below where the next money's at. All right. We're going to see how this plays out. Let's just quickly check the ES again. I know we went maybe you guys wanted to see more examples, but I'm trying to show you how the examples that we showed you will be able to help you choose your own setups. Rather than me just saying, hey, take a call right now and you following blindly, I'd rather you understand why I'm taking that, so you can get off of this call and you can go make some money right after this call. And we're about wrapping it up, you guys. There was a lot of stuff we talked about, a lot of value. I hope you guys took that information in. I hope you guys absorb that information and understand that I'm showing you guys maybe something you already knew, but the only difference is when you stop overlooking some of these things, that can make a huge difference in your trading, everybody. I'm not kidding you. I'm not understanding the importance of the number 3 is when I came up with actually first developing my own strategies and the first time I actually felt that I was understanding market movements by understanding some of the simplest things. Right here, what happens here, you guys? What is this? Goes up, price goes up, touches it, 1. Goes up, touches it, 2. Goes up, touches it, 3. You were selling here. Goes up, rejects it one more time. Yeah, beautiful trade. This is on the ES, you guys. This is not the TF. This is the ES, which we didn't go through. This is the E-mini Russell. Followed basically the same suit. Rejection with a strong bearish candle. Since that entry, if you would have gotten in here from, let's just say 2,112, 2,000 would have been out. You're done trading for the day. All right, guys. Zach, do you want to close it out with anything? If we guys have, Cam, I'm not sure how good we are on time as far as everything, but if you guys want, we could just close this out and we could use a few minutes as a Q&A if people have any questions. You guys just let me know.
Okay.
Yeah, Eddie, that was great. Sorry to cut you off, Cam. What were you saying?
Yeah, thank you guys, and I appreciate Cam for bringing us on. Yeah, we can hear you.
Yeah, there's some questions. Do you have a trading room?
Yeah, we do. We do have a trading room, tradinggroup.com. That is our educational hub, basically. We are teaching people the stuff that I just showed you right now, you guys. Obviously, we do have exclusive strategies for our premium members. We have some advanced topics. We have all the fundamentals. It's all there, you guys. We do live sessions. We have our premium webinars every Friday, and a lot of very, very interesting and exciting things that we're working on for the future for these next coming months. But yes, to quickly answer your question, we do have our trading room, tradinggroup.com. You can go to tradinggroup.com/tradingpub. Cam just posted up the link for you guys. And, one thing we've always been adamant about from the very beginning is we've always given this fundamental information for free on our site. We do have more advanced strategies, things that are working for our members, but we've always maintained that everybody has the right to this information, and you shouldn't have to be able to pay for that. And the only problem is when a lot of people have things for free, which this is everywhere in the internet, basically. I'm not showing you guys anything new, but when you have things for free, a lot of times it gets overlooked. And we've been telling everybody from the beginning, and we always will tell people, the fundamentals, if you're going to begin anywhere, begin with the fundamentals. Begin understanding the market. Don't hop from one group to another. I mean, if you want to, go ahead, but don't follow the path that a lot of people have taken, which leads to unsuccessful results. Instead, you can look at some of the basics, and we showed you guys what's up on the call, and I hope you guys really took that in. And again, Cam, thank you for having us on this call with you. And yeah, we can just answer some questions right now if you see any more that you want to throw out that you noticed.
Okay, that's an excellent job, and I just want to follow. We took a couple of trades. We had a group decision on a crude oil trade. There were plenty of opportunities to take profit on that trade. It expired a hair out of the money, so it would have lost if you held it to expiration. But there were opportunities to pick up to a $20 profit. Now on the FTSE trade, I put in a risk reward of risking 70 to make 30. I didn't get filled on that, but I did run a spread, and that spread picked up 10 ticks, 10 pips. So I equalized it by 10 contracts, so that picked up 100. The DAX, which was a big loser while we were trading, actually rebounded and dropped and picked up 17 pips. So that was $170. And the real winner today was the pound dollar, which picked up 50 pips. So that was pretty strong trade. Actually, the market kind of on the FTSE rebounded back to the T line. Excuse me. The rules held. The 9 o'clock hourly bar did not threaten the 8 o'clock bar, so that was a successful trade. If I would have gotten the binary, or if I'd basically given up a little more risk, I would have won the binary. I won a spread once with it, picked up $100. When the market came back up to touch the T line, I actually have another spread going on that, and that's up $30 right now. So just wanted to kind of let you know how some of the earlier trades played out. Eddie and Zach,
Excellent
great job.
Excellent job.
Loved your technical and fundamental analysis. Great stuff on the indices and the Forex markets. And we look forward to doing this again.
Of course.
So next month, look for a reminder. We're going to probably do an evening session this time around, and I'll have a guest speaker on board. But I want to thank everyone for showing up for this, and hope to see you around next time.
Thank you, guys.
Definitely, I just wanted to quickly cut in and say thank you as well, both for the opportunity to be here and for everyone that's on here. We definitely appreciate you guys, and from what I believe, you will have access to a replay of this. So, I mean, at the end of the day, what we are offering to you guys, it will be available regardless if you're here with us live or if you're watching the replay, because I mean, you've invested the time into gaining this education and this information, and we want to make sure that we can be there to help you implement it. So again, thank you, both Cam, Rolly, Yenna, and everybody that was here today.
Yeah, thank you. Thank all of you guys at TradingPub. We do look forward to doing this again with you guys.
All right, have a great trading day.
All right, guys. Take care. See you.